This conference will now be recorded.
Good evening, ladies and gentlemen. This is Clueless Trading Frank. It's approximately 9:08 p.m. on a slightly rainy evening here on the Jersey City waterfront next to the PGA golf course overlooking the great glorious city of Manhattan. The what's the word this what's it the city on the hill as they call it, and overlooking the Statue of Liberty. God bless America. Grateful for where we are. Uh, this session is a strategic webinar, midweek webinar. We are going to throw out some things that's going to blow your mind tonight. Guaranteed. I'm going to do it because I've been thinking about it. I'm going to do it. On that note, full disclosure, it's purely for financial education, not for any solicitation or advice. We're going to cover some fundamental economic as well as technical, obviously, strategies and charts that we follow. And we are one day away from Halloween. So hope you all have your costumes, and hopefully the market doesn't have a very scary costume tomorrow. We all are in the same boat. Full disclosure, this is purely for financial education, not for any solicitation or advice. So let us begin. So first and foremost, what's the biggest thing that happened today? This man happened today, right? Exactly. And what did he exactly say? Most people out there, including traders and even hardcore investors and so-called Wall Street analysts. Okay, I come from Wall Street, so I have a right to call them that. Don't understand what he said. He only said one word. And that's the reason why the market rallied. Because the man is a good man, as I've always said. I will always support him. And I think our great president, Donald Trump, should send a tweet tomorrow morning, which will send the markets up 250 points higher, to say, Mr. Powell, I thank you for all you've done. And I hope Donald does that. I really do. Because all his attacks on Fed Chairman Powell has gone to waste. Powell has done everything that this country needs. And that's the reason why the markets are making new ATH all-time highs. Monetary policy from the Federal Reserve, from this man, cannot itself cure all the ills. Fiscal policy, i.e. infrastructure projects, where hopefully the Democrats agree with, as President Trump will place on the Congress in the next month or two. The Chinese trade war, which President Trump is doing a great job on lately, which is in the works. Phase 1 deal. That's in combination with the Federal Reserve monetary policy, i.e. money supply, i.e. QE, i.e. balance sheet reduction, i.e. all kinds of other stuff that they do to provide liquidity to the U.S. economy, is the combination to make America great again. And let's not forget, American businesses, as shown by Apple, as shown by Facebook, as shown by so many other companies. All right? So this man, as he moves his head, said only one thing. And if anyone could tell me what he said in that one line, I will give them literally 6 months to a year off on their subscriptions. So think for a minute and tell me. It's
I gotta
somewhere
guess, Frank.
it's somewhere in my Twitter feed. Yeah. Try. Go ahead, Joe.
Oh, this is Paul. So I'm going to guess that he said he's not going to increase rates until inflation says otherwise.
You're good, man. Now I'm caught. Yeah, exactly. But
I read your tweets.
I showed that. And I got to work out something with you because I'm now on the hook to give you almost 6 months to a year free. Yes, absolutely. He said in simple terms, that if inflation doesn't go nuts, he's not going to raise rates. That is something that as a investor, as a trader, as Wall Street, they love. It's like the sugar daddy just giving you the leeway to do what you need to do. Let the economy go. I've always said this from day one. Stop pissing on this great man. So hopefully my New York friend, Donald Trump, sends him a congratulatory note tomorrow. And I really wish that happens. The markets are going to be relieved. I really hope he does. I don't know. Or any one of his lieutenants, Larry Kudlow, Mnuchin, or anybody, just saying, hey, Chairman Powell, you did a great job. So there you go. All right. So this was big. So now we have the Fed out of the way. Okay, gone. He's monitoring things. It's going to be, meeting to meeting. If the economy really speeds up, of course, he's not going to raise rates and all kinds of good stuff. And that's the reason why this happened and why this might happen in between tactical pullbacks, blah, blah, blah. All right. All right. Let's talk about the fake news. All right. I'm not in the business of slamming the media and saying everyone, journalistic freedom is all sucks and all that garbage. But there were two pieces of really fake news. And I'm not going to put out any discounts out there for that, but I'm going to ask you the question. What were the two pieces of really fake news for people who actually read my Twitter feed? No. What were the two pieces? And I even put out like fake news. Oops, what happened here? Can anyone remember? Maybe Paul? So I'm at pull a Donald Trump game. If you can answer this question, I'm taking back your my offer, my first offer. What were the two pieces of fake news that hit the tape between yesterday and today? Come on, gentlemen, ladies, anyone out there? No one knows? I'm not testing you guys. I'm just asking you guys. Because this is how you become a great trader. When you can incorporate all the great, all the info out there and then incorporate that in your trading and just go with it. There's actually one big piece of fake news. What was the second one? I'm trying to remember myself. It's been a long day. No one remembers? Let me try to find it on the Twitter feed. And if any of you are listening, you might be scrolling down there saying, hey, what did you say? What did you say? Fake news. All right. The fake news was, and let's see if I can write this down here. One second. Actually, it was last night. Anyone remember? It was the news that came out of Reuters and then the South China Morning Post, which I follow, which really comes out with the real news. Basically rejected that statement. Anyone? Take a guess?
I don't know. I didn't see it.
Okay, you don't have to see it. I mean, yeah, I mean, I did post it there. I'm trying to find it myself. So here was the news. All right. So I'm going to pull out the Twitter feed on. Okay, this is the first one. So Reuters reports yesterday that China was not too keen on signing the phase one deal. This is Reuters, our news service. All right. That they were not too keen on signing the phase one deal, which is very critical, and that they're going to back off. Complete garbage. China's going to sign the phase one deal. So the South China Morning Post, you guys can always follow it. You know, these guys are direct, like hard hitters. They're reporting directly out of China. China experts back Donald Trump's phase war deal, but say U.S. must reject unilateral approach. Obviously, they're going to say that. The U.S. does not have a unilateral approach anymore, i.e. one-sided approach. He's embraced the phase one deal, our president. That's the reason why he's shaking hands with this guy, the vice premier of China. He's a very smart guy, by the way. And that's why he's smiling. See? Smile. This guy's smiling, hands shaking. All right? So the bottom line is the fake news was Reuters reports that, oh, China's going to back off the deal because they're not ready to buy a lot of soybeans. I'm sick and tired of this garbage. Because Reuters and Bloomberg, which I like a lot, comes out with this BS complete bullshit reports time to time to bring the market down. Remember the market went down a little bit on Friday, on today's Wednesday, Monday, because that news came out, and I told you guys to buy the market, like here, like here. So don't always believe the garbage that comes out of there. Then what's the news that came out today which said, oh, the market didn't like that a bit, yet the market hit new highs? What was the news that came out today about, and I'm going to give you the hint, because I want you guys to be intelligent. Other services want you to be stupid so you can rely on them. By the time you get done with my service, you will be trading completely independent, hopefully with the help of my charts. So what was the other thing that came out today? We are an intellectual service. We're not in the business of making America stupid. We're in the business of America smart. That means making our traders smarter. So what was the news that came out today? A big piece of news about President Trump and China. I'm sure Paul will answer that question. That rocked the boat for a short while this morning. And then that's where we hit the bottom right here at 30.25. Then this is where we landed up. Please think and answer. And if you guys really follow my Twitter feed, if you really want to make you the FU money, then you got to follow my Twitter feed. And you guys are smart enough. Do you all passed your 10th grade, your GEDs, and your school? Most of you went to college. Come on. It's not education. It's called street smarts, Wall Street smarts, stock smarts. So what was that? Can I ask that question and be silent for 10 seconds? Somebody would come with the answer and say, no, I don't know.
Frank, I'm going to take a guess here, Paul here.
Yeah.
And I think you kind of answered this question for me during the day anyways, but was it the summit being canceled?
Yes, thank you so much. The summit in Santiago on November 16th or whatever, 2 days after my son's birthday, He's going to be 21. Wow. Good kid. I wish everybody had a son like that. Doesn't even drink, loves high performance cars, kicks ass in school. What more could I ask for? I'm just kidding. I was worse than that at his age. Yes, the summit in Santiago canceled because of riots happening in Chile. A beautiful country, by the way. Never had a chance to visit there. Had friends from there. Great steak, beautiful woman. Oops, sorry. Yeah, great stuff. So what the heck does it matter? This is what contrarian game theory is all about. The average trader will say, "Oh my God, Chile canceled the summit because of the riots and stuff." Now these two boys, well, not him, but President Xi, his boss, they can't sign the deal. Markets are not going to like it. BS. Can somebody tell me? And this is the really hardcore intellectual $1 million question. Why do you think that happened? This is what I need to know. Who thinks outside the box? Why do you think that happened? That Chile all of a sudden comes out this afternoon and says, hey, wow, look, the markets hit exactly where I said they're going to hit. This is really scary, guys. Come on. I didn't draw this chart today. I drew it weeks ago. Look at that. So why do you think Chile just suddenly canceled the APEC, Asian Pacific Economic Conference Summit, where President Trump was going to meet President Xi and sign the phase one deal? Why do you think that happened? I want to
So
see
the markets would go down.
Bullshit. Wrong. I need you guys to think outside the box. It's like
Hey,
you're
Frank.
having a couple of great drinks and you got to think outside the box. 1 second, Paul. And anybody who can answer me that, oh boy, I'm going to literally bow my head and give this whole service away to them and say, you know what? I'm hiring you. Because that's called game theory analysis. That's how a poker player sitting in Vegas thinks. Just the way we are in the market. Go ahead.
Okay. So I'm going to theorize that Xi and Trump talked behind the scenes, and they wanted to do something better together to make a bigger splash. And so Chile knew that they weren't going to attend, so they kind of decided they wouldn't attend ahead of time, and Chile made up an excuse to not have the summit.
You're fucking good. You're almost good. You're actually very good. Okay? I'm serious. And when you leave your real job, we're going to work together. Well, yes. And this is, I'm going to just open it more. The deal is almost done, but it's a lot of technicalities, guys. And listen to this carefully, for God's sake. Because this is how the game works. Okay? The real game of life ain't about 1 + 1 = 2. The real game of life is not black and white. It's all in the gray. So what Paul explained is 70% of the explanation. So basically, it takes a little bit longer to put the structures together. They wouldn't have that together by November 7th or 8th or 16th, whatever. So you don't think that Chile was asked protest? We had protests in Germany, in South Africa, and every other place we had a big economic meets in Vienna, where they always have it. My favorite city in the world. Been there twice. Unbelievable. Vienna is like heads down. Forget Paris. Vienna. Okay. So there's always been summits where there have been protests. So what's so special about a bunch of goons out in Chile with the protesting? Right? So he's right. It takes a little bit longer. So they decided that cancel that, and we're going to have another venue. And that venue, most probably, in my opinion, to make a really big splash, guys. Wake up and listen to this to follow up on what Paul just said, this is your NASDAQ QQQ, just hit 198, by the way, as I said, after hours, and will probably go higher tomorrow. So they probably said, you know what, we'll have it in the United States of America or in Beijing. You don't think President Trump doesn't want to be the next historical leader like Nixon, even though he was thrown out? He opened the door to China back in the 70s. If any of you know American history, even though you live here, it's called ping pong diplomacy. And he made it happen. That's the reason our economy made billions and billions of dollars on China, and China made billions and billion dollars of us. President Trump knows that. So the big splash is either going to be in Beijing or in Camp David or in Mar-a-Lago, and it's going to happen. Santiago, Chile. Okay, it's done. Exactly. So the piece of garbage fake news is out there from different outlets, like, oh, they canceled that, now everything is off. I get this Instagram. By the way, you guys all need to follow me on Instagram. Look at those options chart. Look at some of the comments that people put out there, and I like blow them away. Come on, guys, the least you can do to enhance your own books. Some guy wrote like, oh, China deal not done, now they're canceling the summit. I said, dude, wake up. So yes, exactly. So there's going to be a lot of fake news that's going to be coming out back and forth, and you have to read in between the lines. And if you follow the charts, you don't need to read in between the lines. You have to read in between the candles. So let's get in there, guys. All right. Thank you for your responses. And we'll move on. Always think outside the box. And thanks, Paul, for your insight. You're definitely going to be you're definitely going to catch, you understand, which I know you already are, a lot of the crap that I talk about, more importantly, all the charts and stuff that I do. We had a lot of winners today. We had a couple of losers, but a lot of winners. Net positive. After hours, we have Apple, the biggest one, well, Facebook. I didn't get a chance to put a bunch of trades out there, but I took a trade called OLED. Does anyone know what OLED is? What is this stock, OLED? And why is it so important that I bought a couple of calls on? It's up 20, 30 bucks after hours.
They make the screens.
Yes, thank you,
device.
Mike. They make the screens for Apple iPhones, also for Samsung, but I hate Samsung. I don't hate Samsung. I call them Samdungs. And if you have a Samdung, please get an Apple iPhone. Even though Samsung profits in Korea, as I heard on Bloomberg, I was having my early keto dinner, Samsung profits were higher. Great. OLED, ultimate company, up how much? Like 30 bucks. And if you look at the chart, you'll be like, should I buy this or not? So I thought about myself, you know what? Let me just buy a few calls. It's a risk. It's a gamble. Boom. Just went nuts. And let me see here. I think I had it here. This is Facebook. Facebook is good. I wish it was higher. It's just breaking out of a range. It's got more room to move. Let's see. Yeah, look at that baby. Now some of you will scream and say, why didn't you put that out? So yeah, well, I put a lot of things out. You guys don't buy. So 4 o'clock, 173, 199. 27. Oh, went to 202. And you know what the best part is? You guys still have room to buy it, because this is a real deal. I read a Bloomberg article 3 weeks ago how they are changing their whole manufacturing format. I said, wow, that's great, because these are the screens that make Apple great. So let's look at the weekly on this thing. The stock is at 200 right now, right there. The high for the stock was 230. You don't think that the stock can go to 230 on this momentum? Absolutely. It's right here right now, after hours. Now, there were a couple of indications. If you look at the chart, if you really want to kind of be a tactical trader, so you could do this. Thank you, Mike, for the thing. So, and the actual name is, which I have to, the actual name of the OLED, by the way, makes Samsung TVs, all those fancy, like they're the ultimate company which makes all the ultimate TVs work. So the company is I can't even find it on Google. It's all OLED. It's like they're telling me about LED. You know, we know LED TVs. So OLED is. Can anyone tell me the name? I mean, I'm trying to see here.
Universal Display Corporation.
Yes. Universal Display Corporation. Thank you, Dom, of Japan. That's what they're called. Because I'm like, I typed it, I forgot the name. It's Universal Display Corporation of Japan. And the Japanese are not in the business of making crap. We know that, okay? They're in the business of making high quality products. So here is the technical chart that I'm drawing. We have more room to move on this baby. This is the very optimistic scenario. This is the less optimistic scenario. The stock will go to 340. It will at least go, it's right here right now. 200 right there somewhere. The stock will hit 210, 220 within days, if not tomorrow. I'm telling you right now, this is a very powerful company. I don't know what the short position is, but I do know that a lot of positioning from hedge funds were net short. Okay, so 220, 260, lots of room to move. This is a long-term chart of the stock going back to 2017. They have turned the corner. Apple's iPhone 11s are selling very well. Apple is up very nicely. Apple hit the same level I was told you it was going to hit, which was 250. It's probably going to go to 260. Not right away, but it will. So this is a stock you have to keep in mind. Now here is Apple. After hours, this is, let's take a look at Apple on the daily charts that I drew for you guys. I told you the stock would go to 250 right there based on my upper channel. Acceleration channel was 254. What did Apple hit? I believe after hours, it hit 252. Remember, you guys, imagine you're a hedge fund. You got a couple of million bucks, maybe $1 billion or $2 billion, but let's say you're a small hedge fund, 100 million bucks. All right? And you bought 100,000 shares of Apple. The freaking stock is up $7 after hours. Regardless of where you think the stock's going to go, are you stupid enough? Or if you're an individual investor, let's say you have 100 shares or 500 shares, are you stupid enough not to take a profit after hours? The obvious answer is no. So that's the reason why it hit 252 after they pulled the stock down. Complete manipulation. You don't think the market's manipulated? Come on, guys, wake up. Everybody's got the same information. The difference between Clueless A Trading and everybody else is we read the information differently. And that's the reason why I asked a couple of questions, and Paul, some other people answered those questions. We have to think differently. We have to think outside the box. So if you're a hedge fund who had 100,000 shares because the stock pulled back right here at 242, The stock pulled back on Tuesday, looked like the world was falling apart, right? At 242, and it bumps up to 252. You got 10 points in your pocket, and you have 100,000 shares because you're a hedge fund. What's 100,000 times 10? 100,000 shares times 10. What's 100,000 shares times 10? Come on, guys.
1 million.
Yeah, exactly. I know America's going downhill in math. I mean, that's the reason why it's number 64 in the world when it comes to math. But come on, as traders, you guys need to be number one in math. Simple math. 1 million. So you made $1 million since yesterday afternoon, and that's the reason why the stock pulled back. Now a dumbass, excuse me, RET, retail emotional investors says, oh my God, or most of those people who are complete dogmatic bears on all the different platforms, trading platforms, stock tweets, and other places, they'll be like, oh, look at that, it pulled back to 252, they're not going to do anything. Dude, lots of hedge funds, the smart ones who bought down here, and we also bought when the stock was lower, we bought it here too. Except we don't have the money to buy 100,000 shares. They just made $1 million in less than 14 hours. So why shouldn't the stock pull back? Think. Take a longer term view of Apple. There was a red candle here. Stock hit 250. Actually, this is not a depiction because the weekly charts are not real time. Let's look at this. There you go. The 4-hour charts are real time. Remember these channels. I'm not an idiot like a child. I'm going way beyond the child trader stage, which many of you might be stuck at. Remember, there's a biological age, how old you are, and there's a trading age, how old you are. So you could be 45 or 32 or 24 in biological age, but in trading age, you could be 8, 9, 10, 11. Remember that, okay? Seriously. I'm not saying that stock's going to 280, whatever. All I'm saying, the stock is good to go back towards 252, possibly 260. And this is what the stock did tonight. Upper end of the channel is 255. So it went to 252. These interim acceleration channels, 255, didn't get there, got here. The hedge funds took $1 million off the table. Now, can somebody tell me what's happening with the stochastics, please? And Paul, stay away from the picture. I want some people to answer. What the heck is happening with the stochastics? Anyone should be able to answer that.
It's setting up.
Yeah, it's setting up. Okay? It's setting up. Where is it setting up to? Like go to the moon? No, it's setting up to go to 255, possibly 260. And this is a 4-hour chart that's the closest cousin as a trader to the daily charts. Absolutely. Thank you. So the positives on the overall market is Mr. Powell delivered the goods. Everything that our economy needed, Wall Street wanted to hear, and our great president Donald Trump wanted to hear, except I hope Donald has the politeness and the courtesy to stop blasting him and sending him a congratulatory note for doing what he's doing as a great Federal Reserve governor who he nominated. Instead of pissing on him, I really get pissed off about this, honestly. It's so rude, it's so obnoxious, I can't stand it. You can't do that. You do not piss on a great patriot, economic patriot like Jerome Powell. Yeah, you can piss off a Schiff, and Pelosi and your Democratic enemies, but not on the Federal Reserve governor. So you all, when you go to bed, remember that. And I don't give a F like what political party you're with. All right, end of the topic. Sorry, got a little emotional there. So all right, so that's it. There's Apple. OLED, just told you the stock is here right now, 200. The stock has room to move to 220. Facebook, kind of a mixed picture. Facebook right now is actually breaking out of a range. My charts are there on the screen. Oh boy, on the other screen. So basically, Facebook is right around here somewhere. What it needs to do is, if you're looking at Facebook as a play, head, left shoulder, right shoulder, needs to break out over 200 in order to hit 210. High for Facebook was 220. It has to re-enter above this uptrend line, which I'm going to fix in a second. There you go, ladies and gentlemen. So technically speaking, we need to stay above 195 or 196, which I believe Facebook is right now. Is it? Yes, 196.64. So we are above. We have re-entered or recaptured that downtrend line. Any of you guys can do this, all right? Any of you can do this. The downtrend line is 193.38. Facebook after hours is 196.64, right there at 8 p.m. when after hours trading started. So that means we have recaptured the uptrend line. Needs to stay above that. We will recapture 200. Given favorable market circumstances going into the, well, we are at the end of the month. I'm sorry. Going into maybe the first week of November, we will get a quick, fast correction in the market very soon, by the way. And I believe it's coming after the first 5 trading days in November. Mark my words, all right? That's the way it goes. We might hit 210, extreme move, because at that point, it will be full pattern completion. Forget about this move here at 218, which was an aberration. This is what the real high for Facebook was, 210. Somehow or the other, we get there. We have a lot of earnings coming up. I believe NVIDIA is in November. We have a lot of earnings coming up, guys. NVIDIA, I told you guys we would basically attempt to break this. We did. We went to 208. This is your weekly chart. If you want to make a serious amount of money on this stock, you got to see the action, what happens here. If the stock for some reason pulls back to 190.95, you got to grab it with both hands down. If the stock runs up to 220 before earnings, you do not want to be in that stock, because this is your first pattern completion, which I said is going to happen. You do not want it to happen before earnings. Retail traders, somebody answer me. When do they get most excited? When a stock is running into earnings higher, correct? And don't lie, yes or no? When a stock before earnings is acting very strong, does it make you feel good or bad? Come on, somebody answer, please.
I guess it feels good.
It feels good. Thank you, Mike. And it is exactly the wrong feeling. Because when a stock is running really hard into earnings, up like, let's say, a big stock like Google type of thing, 20, 30 bucks, the chances are it is going to drop immediately after earnings. You want a powerful stock to be somewhat skeptical, investors to be skeptical, markets to be nervous, and the stock acting somewhat weak, like OLED right before earnings. It's called playing the odds. It was acting somewhat weak. it didn't look very sexy. Right there. This is what it looked like on the daily. It looked like that. It looked like a bear flag. And then it ramps up. So what you do want to do is when you want to play like a hardcore long earnings, we have a lot of big ones coming up. We have NVIDIA, we have Booking.com, Priceline, which is normally a 200 plus point winner or 200 minus point winner. Once in a while, you guys got to step out of your comfort zone. That's what options trading is all about, is stepping out of your comfort zone and get into one of these trades, put some money down, and just let it go. Just let it go, because there is nothing certain about earnings. But a great company in a right market environment, which still hasn't ramped up, is a huge candidate for a big winner. So NVIDIA, in my opinion, is one of them. Now, we had a couple of huge winners I want to show you guys. And this is another lesson you have to learn as a trader. Don't always have to buy the name brand stocks. I mentioned this one. I didn't mention OLED today. I mentioned you guys Mattel. Mattel was up 22 frigging %. You want to buy your girlfriend, your wife, your baby a toy? Go to Mattel. Buy them a doll. Mattel is going a lot higher. This is serious shit. Oops, sorry. Mattel calls, and please go to my Instagram site to see what the Mattel calls did. You want to be a real trader? You don't stick to like the Netflixes only and the Apples only and the Facebooks only. You want to diversify into other names. Look at this gap. Nobody cared about Mattel. The stock was down here at 10 bucks. The stock went past 13. That's like a $100 stock going to 130. The calls went up a gazillion %, and they were cheap. I mean, really cheap. And now the stock is in play. Remember, lots of quant traders, quant shops out there, all of a sudden, or I Investor Business Daily, all of a sudden the RSI and all those metrics go way high, right? End of the night, you check it. Investor Business is great, actually. They rank the stocks A plus, whatever, A minus for technical strength, blah, blah, blah. So now it's on the radar. We were there before the radar. Not always this right, but hey, it feels good. All right. This stock, my friend, is going to $15 to $16, if not 17. And the calls are still cheap. So if you sit there twiddling your thumb, wondering about like, oh, why is the stock not working? Why don't you freaking put a few bucks in this? That's Mattel. Any of you, did you buy any of the Mattel calls or anything? And just say yes or no, I don't care.
No.
Did everyone fall asleep other than Dominic? Okay, good. So you have an opportunity. Remember, it's not where you're coming from when it comes to trading. It's where you're going. You don't always have to be at this level. I took a flyer on the cheap calls. I go through my selection, like I said, 13 pages of earnings, right? I mentioned that on the Sunday webinar. And I just said, okay, this and this. I can't buy all of them, but I buy a lot of them. I buy like one call at a time sometimes. And it builds up. I'm like, whoa, there's like 12 companies. How much money do I got on those? It's like playing the roulette table. You pick the numbers, you're going to hit 1. You're going to hit 2. You're going to hit 3. So guys, wake up. Change the way you're trading. Change the way you're trading. If you don't change the way you're trading, you are always going to be stuck in anything. Doesn't matter what great recommendations I give. Mattel is going higher. What was the other one that went berserk today? You guys do look at my Twitter feed, right? What's the one that starts with the P and is C?
PCG.
Thank you. California fires burning. Terrible. Schwarzenegger was apparently in his Humvees, like running, like very sad. What's happening out there? They have those billion-dollar, multi-million-dollar, $30 million homes, and it's all in the fire zone. And PCG got smacked. We've traded the stock a few times. I told you guys to buy it yesterday at around 5. Not at 3.5, at 5. Where was the stock today? At 6.14. If you just bought the stock itself, you would be up 22 frigging percent. If you bought the calls, you would be up more than 200%. And the calls were cheap. How expensive are calls when the stock is at 5? So this is a long-term picture. There's a lot of stuff going on. Does anyone remember my tweet on PCG and a name that I mentioned on it? If you guys really look at my tweets, not that you have to, it's not my business. You guys do what you want.
Warren Buffett.
Thank you. What more did you need to know? Now, he's not in it. Governor Gavin, who looks like a frigging Hollywood movie star himself of California, is mentioned like you should Buffett should look at it. Buffett's maybe looking at it, not. But a couple of congressmen in California said, they asked the reporter, so how do we save this company? Because it's in semi-bankruptcy proceedings. And he said, well, we need a public-private partnership. That's what makes a country great. You need a public-private partnership. You need a Buffett type of investor. You need the state to come in. All I know, I ain't no Buffett. I just told you guys to buy it yesterday, okay? Because I know what the stock went to last time, which was around here. And now it was here, okay? Around 4. So let's zoom in. Hello. And I showed you I showed you the charts. All I'm saying, this stock can go to $9. It is barely here right now, and the calls are cheap. So if you don't think that you want to make money on this type of stuff, well, let the fires burn. No, let not the fires burn. This has a lot of room to move. We get even a Warren Buffett kind of gesture, like, yes, we're thinking about it. Coming out of the Buffett camp, the stock will be up 40%. Your calls will be up 300%. We called it. Other one was a company called Crocs. You know a company called Crocs. What is Crocs? They make ugly shoes. They used to. Now they make very fashionable shoes that every frigging New York Upper East Sider buys. And this is what the stock has done. It's gone from 6 in 2017 to 39. Nobody talks about it. 6 to 39? Holy cow. You ever heard about Crocs on TV? Nope. No, you don't. It's up 533%. I wish I put my whole net worth in this stock and just bought a couple of. I do have the original Crocs, which is those ugly gardening shoes, and then I have a Crocs pair that I bought 2 years ago, which looks like a very cool, like a boating shoe. And I love it because when I'm walking my dogs in the rain, that's the coolest. I'm the stylish, I'm the most stylish guy, and my feet don't get wet, and I don't slip. And whatever they're doing, the business are going nuts. Crocs calls were up a lot. Go to my Instagram account to see what they did. So this is another serious chart. This is a weekly chart. Like, whoa. Imagine if this was the Apple chart doesn't even look this good. This is serious megaphone pattern, which tells me that the stock is going to go to probably $45. This is on our radar. Back in play. And Crocs, anyone remember Crocs actually came out with, I think they did. Uggs is always about the winter. But Crocs also came up with this fleece line, you know, very stylish, like comfortable shoes. What did they come out with a new brand for this winter? And it sells out like hotcakes. Think outside the box. So this is the market. Take a breath. If you're short, you better friggin' watch out. If you're scared, stay scared. All right? This is pretty serious stuff. What is this pattern? What is this pattern? That it broke out of today.
Ascending wedge,
Ascending triangle.
triangle.
Yes. Yes. This is a rising wedge. Yes, you're right. Ascending triangle. Just if we were all really technical, which all of us are not really. I try to be as technical as possible. But emotions do get involved, right? When things get crazy, come on, let's face facts. When you face the truth, it sets you free. Yes, I'm more robotic, but hey, it's tough sometimes. And then I'm right. So this is serious crap. We broke out. So what's the upper end of this rising wedge? That's 358, 360. Every chart that I look at is pointing to one frigging promised land, 3060 S&P. So if that's the case, we closed at 3046. We don't have that much room to move. Now, on a really bullish scenario, well, 14 points times 8 to convert it to the Dow Jones is basically 112 more points, right, on the Dow. But does it always stop exactly there? No, there's always an overshoot. So I would give it another 200 points on the Dow or so before the market takes a breather. But this is a very bullish chart. Okay, this is for the Dow Jones. And in between, the market's going to play all kinds of games like it did today. Generally speaking, on a really bullish market, this is a line that I could draw. This is the actual rising wedge right there. And that measures up to almost 3130. Remember one thing about the stock market. When everybody's looking at a certain level, it will take its sweet time to get there, but when it gets there, it's going to bust a move because nobody thinks it can go higher. And that's, in my opinion, what is about to happen. And some of my favorite hardcore technical analysts who just show up once in a while, these guys are Serbian, Yugoslavian geniuses, Marko Kolanovic, and this other guy, Marco. They all have this distinct European accent, good-looking guys, like, smart-ass Wall Street guys. And smart, not like the dumbasses who show up on CNBC and stuff. These guys are all mathematical geniuses. They talk about algorithms. They talk about positioning by hedge funds, blah, blah, blah. And the rest of the nice guys that they bring on CNBC, they all talk about the same crap all day long. You guys know that. They're great guys to drink with, but not to make money with. And the Market Kalanovich of the world and stuff, when I put their articles up, read them. These guys are serious geniuses when it comes to the market because they're all talking technical stuff. Tony Dwyer is another great, smart analyst. Tony Dwyer. Listen to him. Katie Stockton, the most beautiful analyst on Wall Street. Known her since the 2000s. She's fantastic. These people talk straight, and they're right 90% of the time. Yeah, they might be late a little bit, but they're right. And the rest of them are garbage. Garbage. So this is what looks like the market's going. Let's take a look at the QQQ. We're long that. And I would say it's going higher. In fact, it's going exactly where I said it was going to go. As of tonight, I said it was going to go to 198. Hello. It hit 198.17 after hours. I think I did my job. Now, unless we have a crash tomorrow morning, and Donald tweets like, I hate Chinese food, it made me sick, or the Chinese go, I hate Donald Trump, he makes me sick, the markets are going higher. So we get a gap open or not a gap open. If we're getting close to that level, you want to sell it. But I told you 198. Now, if you look at the daily chart, it's higher. How much higher, people ask? Well, let me just throw some back of the napkin calculations. I say 200 on the Qs. Why not? Booking.com could be up 80 bucks. Nvidia could be up 10. And any of the major components of the NASDAQ 100, which includes the biotechs, which I'm going to show one of my favorites, could bring the NASDAQ, NDX, or QQQ to 200 because that's what it's showing it's going to go. There's nothing wrong with this chart whatsoever. So one of my other ones is Vertex. This stock has completely broken out, ladies and gentlemen. Completely broken out. It's not where it's coming from, it's where it's going. You might be late in the game, but you want to get in the game. Always remember that. Rule number one in trading. Nothing's too high, nothing's too low. A new high will make another new high. Okay? Major breakout of 195. Trading range 165, 195, 30 points. Add 195 to 30. This stock will most probably go to 225. And I can show you that right by drawing a couple of lines. Okay? Put this in your radar, just like the way you're gonna put OLED universal display on your back on your trading screen. That's what traders do. Stocks show up on your technical screen. You're in it or not in it. It breaks out, and you'd say, okay, it's back in play. The back in play can last a couple of weeks, make you a lot of money. Remember, we do not get married to stocks. We rent them. We rent them. Okay? Only people you get married to is your wife, husband, boyfriend, whatever. Okay? That's the only people you get married to. Stocks, we rent for profit. It's like a Tinder date, okay? Not that I would know. All right? So, 210. Vertex. Want to go a little bit more bullish? Draw another line here. All mathematical lines. Almost 230. Can the stock get bought out? Maybe, maybe not. It's a pretty highly valued company. Throw in a stock or two because I got to wrap up. Any questions I'd like to answer. It's 10 p.m. right now.
All good, brother.
Okay. Tim.
Yes, Tim is here.
Yes. Any particular stock you'd like to look at, sir? I'm here to answer any questions.
Let's look at GME. GameStop.
Yeah. So GameStop is a very interesting situation. GameStop is not just a technical stock. It doesn't follow the same technical patterns as other companies, obviously, but there are a couple of reasons why I'm so bullish on the stock. Number one, a couple of times I've made some very good money on it. I'm slightly down on it right now, but I've been buying the crap out of it. There is nothing wrong in the technical picture. The biggest piece of fundamental news that you guys should look up and read is the fact that Michael Burry, the guy who is the genius behind making a couple of $1 billion and shorting the housing market, loves this stock. He's what you call somebody who's not a day trader. He's somebody who's a fundamental swing or long-term trader. He's a big activist in the company. More importantly, GameStop from a technical standpoint is a very cheap stock. Barron's the other day, I put that article out there, at least the headline, put out last night that these are the stocks that a lot of fund managers buy at the end of the year to show, to basically cover their tax loss selling. And they are what they known as tax loss selling candidates. In other words, they are so oversold that they can have a dead cat bounce. We are playing the dead cat bounce on GameStop. All I'm simply looking at, from a fundamental standpoint, the company has taken some major measures in going digital. Remember, GameStop was a $30 stock at one point. If we look back at it, the stock was a $27 stock. Now, from a pattern standpoint, it is very exciting. The reason it fell, for a simple reason, nobody goes to GameStop anymore. Everyone has digital downloads, and everything is online. Well, GameStop has started to go online. They also are I believe, the primary dealers for the Nintendo machines and stuff. Not that I'm a gamer, but that's that's something what they do. So from a technical standpoint, this is a very bullish pattern. I am looking for 8, the number 8, Clueless 8, as my destination for this number. So when the stock goes from, the options go from the November 15th that I'm in right now, go from 14 cents to 3 cents or 3. I mean, I keep on buying. I say, okay, buy 4, buy 10, buy 50.
It was at 2 cents today.
What was that?
It was at 2 cents today.
Right. I bought a bunch. I didn't get 2 cents. I got 3 cents. I got a bunch of 3 cents. My average cost on it is 6 cents right now. Okay. And the way I look at it, I have till November 15th. As we get, and here's the way you play it, Tim. And thanks for asking the question. As you get towards the first week of November, let's say November 7th, you want to, at that point, regardless of when those calls are, you want to basically roll over, take that money, maybe add a little bit more, and go into December's. I always want to have at least a couple of weeks to at least a month under my belt, because this stock, in my opinion, from what it looks like, is going to go to 8 now. And that means that those calls which we buy at 2-3 cents, we have done this before, where we went from 6 cents to 25 cents, 400%, just a couple of weeks ago. Those 3 cents, if it goes to 15 cents, that's 400% on your money. Now, if you have a nice amount, like 100 calls or something like that, no, I don't know, 200 calls, whatever the case may be, that's your risk money. You will make a lot of money, regardless of what the market's doing. Now, here is the interesting part. This is old-fashioned technical analysis, and all of you will know exactly what I'm talking about. What is happening here? Volume. Remember, the old-fashioned way was to look at price and volume. Even though algos have skewed that thing up, algos are not playing in GameStop. They're playing in Netflix. They're playing in Apple. They're playing in Facebook. They're playing in the market. They don't even know GameStop exists. And I'm happy with that. I don't want those algorithmic high-frequency trading programs inside this stock. because then they'll demolish it. They'll take it from 5 to 3 to 6, and I won't even know what the heck's going on. I want the algos to be out of this picture. Now, how do you know that the algorithmic high-frequency trading programs are not playing in it? The two reasons you know this, and I'm teaching you guys this. Number one, it's too cheap, so they can't really move it around too much. It's too cheap. Algorithmic high-frequency trading programs love moving stocks which are 20, 30, 40, 100, 150, 200, 300, $500. That's what the hedge funds like to play at. When it's a $5 stock, they cannot move size, so they don't play in it as much. Not saying they don't, but they as much. So saying all that, if we follow the old-fashioned way, and I'm going to ask you guys the question, the old-fashioned way of price and volume, what do you see in price?
Price is slowly going up. Upward trending.
By the way, this is not slow, my friend. This is $3. This is $6. That's 100%. Last somebody told me something was slow, 100%. Oh, come on.
Well, over which time period are you looking at?
I'm talking about August to October. You're talking 2 months. So 2 months, you made 100% on your money. If you had real money in this, like real money, you would be just like, hello, I just made my year in 2 months. So it is not going up slowly. It is actually going up a lot. But because it's a cheap price stock, it's a good point that you brought out, Tim. It's a form of perception. It's a law of numbers. Because it's a cheap stock and the stock went up from around 3 to 6, people think that it's slow. If it was a $30 stock that went to 60, people would think, oh my God, that's going up really fast. But it is going up the same way in percentage terms. It went up 100% since August. Okay, so here's the second point. But you hit the right point though. The stock is on an upward momentum. Upward momentum ends, in my opinion, at the major breakdown level that was on June 3rd. I don't know what happened June 3rd. I wasn't in the stock. I'll check it out. It is going to go to 8. Lot of money to be made between 573 and 8.
Where do you see the gap close? Is it like 730, 750?
That gap close shows up on my chart only on the daily. Right there.
Yep.
Right there. Right there. Thank you for the question that I showed on my chart. So gap close is at here. Now, anyone else who's going to be listening to this and listening to this,
what is the number? I can't see it. It's too small.
I'm doing it right now. 753. Now,
okay,
let me just make a point. Everyone who's going to listen to this video and say, oh, I don't have enough money to trade this market, whatever, and you listen to the great questions that our new friend and new member, Tim Savage, is asking, okay? Please listen to it carefully. He's asking some very smart questions. I'm explaining it as best as I can. So bottom line is, this is your gap. Right there. All the stock did on the daily. Okay, and I'm just going to point out some very simple things before I wrap this session up. The stock, one way or the other, in my opinion, barring any major like bad news, whatever, the stock is going to go to 750. That's a lot. 750 divided by where we are today.
580.
Yes, is basically 30%. It's about 31% on the stock. I'm just giving you the percentage of return. That means your calls are going to be up at least 300%. Okay, just based on that. Now, saying all that, this is what I find to be encouraging. It is on an uptrend, no question about it. This is basically a cup and handle. And that cup and handle, in my opinion, is just testing the bottom gap and can slip it a little bit more to 5. In my opinion, it goes here. Now, here is what I like. Price and volume. Price and volume. Look at the volume, the green candles, as the stock is climbing. Look at the small sell candles as the stock has pulled back a little bit. I like the fact that the volume is very low compared to the big buy volumes as the stock is climbing. And I like the fact that as the stock is pulling back a bit, that the volume is low. Now, if I get an ugly volume like this, then I know there's more trouble ahead, but we don't see that. And when you normally get a volume like that, it's two things. One, the stock has bottomed, or that it is going to bottom. It's going to go up a little bit and then bottom more. Whichever the case, this stock looks pretty good. I'm basically playing the gap fill. I like the winter Thanksgiving season. That's when the big holiday game sales happen. This is kind of a retail play, and of course, anything else that happens. One of the last stocks that I'm very bullish on, earnings are tomorrow, is Marathon Petroleum. We have made money on it. We are still making money on it. We were down today on it, and this stock is Elliott Management. This company is spinning off their divisions in a big way, and I don't want to go into a long-winded pitch like I used to back in my broker days. The fact is, it's got a lot of room to move. The stock, in my opinion, is a $75 stock, at least 74. This was the second week that the stock was somewhat down. The week hasn't even ended. We shall see. Earnings are tomorrow. MPC, Marathon Petroleum, huge call buying in the December calls. These are the stocks that, regardless of the market, beautiful technical patterns and can make you very decent sum of money, and the calls are very cheap. Other one that I like a lot, as you know very well, is the most boring company in the world, and that's called AT&T. So this is AT&T's chart on the daily. I have never traded AT&T. Well, not never. I've probably traded it 3 or 4 times in my life. I don't care. This stock, in my opinion, Elliott Management back in the picture, is totally fine. This is a beautiful consolidation flag right there. And as long as the stock doesn't break 36, the stock is going to go higher. And I've shown some beautiful charts on it. So that's all, ladies and gentlemen. Thank you for attending. Lots of great responses from you all. We would love some great referrals, and let's make it happen. The markets are overbought, so we have to be careful. But at the same time, individual stocks will do their own thing, and that's what the stock market's all about. So that's it. Have a great evening, and next session that we'll have on Sunday, we're going to talk about the logistics of options trading, i.e., despite all the great forecasts and stuff, how do we handle our trades? And those things I teach very well in my advanced coaching sessions, because it doesn't matter what options you have. If you can't really get out of it at the right time because of the movements and the market makers who are always trying to screw us out, it becomes a difficult proposition, as you know. So we're going to talk about that a little bit, and people who want to sign up for the advanced coaching sessions, feel free to do so, because I talk about that a lot. That's it. Have a great evening, and God bless you all. Thank you.
God bless you, Frank. Good night.
Thank you, Tim, for attending. Thank you, and all the best to your baby.
Yep.